turn on the news right now, they're going to say, oh, everything's great. The economy's never been better. And there's unemployment's at 3% or whatever the number is today. And our data says otherwise. Our collections are starting to go up. We're starting to see units sit vacant for a longer period of time.
I think there's a lot of different areas of the country are vastly different. And my strategy in the beginning was actually a really shit strategy, which was just buy something between 20,000 and 35,000 a door.
Yep.
And we didn't care where we went to get those units. And so we ended up we had 3,400 units in 10 markets, and we didn't really know any of them very well.
Yep.
One was like Killeen, Texas, and like that was a terrible experience. OKC, horrible. Then we went to Columbus, great. Like it was just like some of them were winners, some were losers. It was hard to predict. And I think you know like Detroit pretty well, right?
Yeah, we've really stayed in our lane. So we're in the Metro Detroit area. We don't buy anything in the city of Detroit. We've talked about it. We've just never pulled the trigger on it. We have just stuck to our bread and butter, the suburbs of Detroit.
Suburbs of Detroit.
And then also down into Toledo, which we kind of call a suburb of Detroit.
Yeah. These aren't like what kind of areas are these?
On the A, B, C, D scale, we're talking Bs and C pluses.
Bs. And you guys know those markets inside now.
Yeah. We know what those rents are. We know what those markets look like. We know what your average single family home sells for there. We know what those people generally do for a living, what type of income they have, what type of people we can expect as tenants.
That gives you a real edge in any market. Going deep into one market, you learn every little nuance.
Yeah.
And you see deals faster. You're first in line. And then you can also find talent.
Your relationships go a lot deeper too.
Yeah.
Brokers, insurance, you name it.
I know people that go wide and that's just their thing. They're like, oh, I found a deal in Iowa. I found one in Kansas. And it's fine. You can do well like that, but it just, you have less of an edge in general. And so like, it's cool. Like even with Terry, with Josh, like you guys have kind of this group of guys that kind of all doing similar stuff. Mm-hmm. And it gives you an edge out there. I couldn't go and out Detroit you. Yeah. In Detroit, you know,
like we show up to the Apartment Association of Michigan meetings and we know all the other owners and operators there and all the brokers and lenders and they're not people that you're just meeting one time. You never see them again at a conference and you're gone. We see these people, we see them around town at multiple different events and you start to pick up on the rumblings of like, oh, this opportunity might be coming available. And okay, you're going to get first eyes on it.
Yeah. Where are you guys trying to head right now? I know that things are kind of crazy in the market. It's a weird time, but what's next for you guys and your company?
The world's changed a lot in the last 3 to 4 years. The industry's changed a lot. As far as where we're heading and what we want to do, we get asked that question a lot. It's like, okay, what do you guys want to do from how many assets under management, how many units? And we've just always come back to, we want to do 1 to 2 deals, good deals a year for our investors. Continue to grow that investor base and just be able to conservatively, safely add to that portfolio. I don't know if that looks like 10,000 doors or what. We're not stopping, but we're being cautious. We're being patient. Opportunities are definitely harder to find than they were 3 years ago. But there's also a lot of pain out in the market right now with interest rates. We've seen the expense growth just shoot through the roof. I think I was telling you earlier that we just saw a 34% increase in our insurance costs. Labor and materials are up. Legal costs are up. The legal time frame now takes twice as long as it used to. Utilities, you name it. So that's a lot of stress on the industry as a whole. And what we're seeing in rent growth, we've seen rent growth flatten. It's leveled off. And in even some cases, we've seen it dip in a couple of spots. So, and the fight for quality tenants has never been stronger than it is right now, at least from what we've seen in the last decade.
Yeah. Why do you think rents have flattened?
They've gone, for a while there, pre-COVID, or at the start of COVID, rents went sky high, right? And everybody was so excited. It got really sexy in the multifamily industry. Everybody started diving in. And a lot of people started to underwrite that into their growth. And then the expenses quickly caught up and in most cases outpaced what we saw there for the rent growth. And you can't keep clipping along at 8, 9, 10% rent growth every single year. I think our industry is a good bellwether of just what's going on in the real world. You turn on the news right now, they're going to say, oh, everything's great. The economy's never been better. And there's unemployment's at 3% or whatever the number is today. And our data says otherwise. Our collections are starting to go up. We're starting to see units sit vacant for a longer period of time. I just think that everyday consumer is just being stretched thin.
Yeah, I completely agree. I think people are like doubling up where they're living. I think also there's, at least in our market, there's the issue of oversupply. So they had a lot of starts that happened in 2020, 2021.
Yeah, you're right. Something we don't see in our market, but yes.
You guys don't see that.
We've had some new construction added to the Metro Detroit market, but nothing like the South has seen, like the Carolinas and Atlanta and Florida and Texas and,
that's really interesting.
and some of those markets.
Yeah.
Whereas if we're seeing new stuff, there's a lot of new stuff in downtown in the city of Detroit, which is really, really coming back. But the markets that we're in, we're not seeing a ton of new supply come on.
Interesting.
We're seeing a lot of, I think, household consolidation again, where people are moving back in with roommates. People are moving back in with mom and dad. People are staying home longer.
Yeah, because it's gotten so expensive even to rent.
Money was flowing freely and you could stay at home and just collect a check for doing nothing. Everybody was buying houses, overpaying for them, moving into their own apartment, or maybe they were working from home and they had to go get their own apartment. And I just think now it's sliding back the other way.
Yeah, it's like residential hasn't really gotten impacted value-wise the same way that commercial real estate has.
Yeah.
You have a situation where there's just still a high demand and not enough supply.
Mm-hmm.
So you've got, and the reason for that is because interest rates shot up so fast.
Yeah.
A lot of people are sitting with 3.5% interest rates. They're like, I'm not selling. Why would I sell and go into a 7%, 8% interest rate?
You've taken all that supply just right off the table.
Yeah. So those people are not really seeing or feeling the impact the same way people like in our space are, because our whole industry is yield based.
Yeah.
And it's based on what kind of income you can produce and those types of things. So there's a big squeeze on our industry right now. And you add in the flattening rents, there's a lot of pain, but eventually it's going to turn into opportunity.
Absolutely. I always say it's a business in a box. Every box we buy, it's just another small little business.
That's a great way to look at it. I mean, it's a very repeatable business, and you're picking one up, you add the staff, you do the upgrades. It's very similar game plan to a lot of them. It's still difficult. It's not an easy business to run.
It's harder now than it ever has been for us.
Yes, I agree. Same here. It's harder in every aspect. But I think as these new lessons come in, I'm like, shit, I'm glad I learned that, because I would have never had to know how to do this specific aspect of the business had I not. We'll be that much stronger on the other side of it once everything chills out. And
I think right now you're really seeing how crucial your day-to-day operation is. I think that yes, you have to structure good, strong, quality debt and keep your expenses, but you have to have good property management, good day-to-day operation.
How do you guys optimize right now? Like, what are you looking at?
I think one of the biggest, most crucial things that we do is we have the data. We have such tight control from a property management side of things, and just the streamlined efficiencies that have been built into our day-to-day property management operation, where there's customized software that we've incorporated into our people that are out in the field every single day. So when that maintenance tech shows up and they all have iPads, and he hits the start job button, boom, he's on the clock. And we've got guys in the office that are watching the big screen with the GPS trackers, and they know, hey, Nate just got to that job and he started the job. They can tell if Nate pulled up to that job and sat in his truck and ate lunch for 30 minutes and then started the job. But as soon as Nate finishes that job, and let's say he had to go and finish the QC checklist before we can officially list that unit. So when he hits the job is done, that automatically triggers an email and goes to everybody else and tells them, okay, cleaning lady, you're up next. As soon as you're done, then we can officially list this thing. Instead, before you would walk in, your maintenance guy would walk in at the end of the day and drop the papers and say, okay, I'm done. Those papers might sit there for a day or two. Now that unit sat there, it's been vacant for an extra 2 or 3 days now. Okay, now we got to go get pictures. That might take another day or two. So you can easily lose an extra week or two of time by not having those efficiencies built in. So that's just one small example of how we just try to move things along as fast as possible. And a lot of those same things are incorporated, just helping us keep track of our costs and having the day-to-day, really down to the minute visibility of what we're spending, where we're spending it, how we're spending it, and how we can keep that in check.